Today we're going to be talking about preventing a winning trade from turning into a break-even or a losing trade. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today talking about preventing a winning trade from turning into either a break-even or a losing trade. So I'm sure many of you can relate to being in a trade that successfully moves in the direction of your entry, moves a fairly good distance, you're in profits, you've got your position, your original stop loss, or maybe you haven't placed a stop loss in the market because it's a share or it's a stock and you're not able to place that with your broker. Or in fact, if you're in the Forex markets, you potentially may have put your original stop loss in and just left it there. The trade takes off, moves in quite favorably in your direction, maybe bigger than what you had expected. But then you watch it pull back a little bit, reverses slightly against your original entry, but you know that it's just it's a temporary pullback or a correction, and then it'll resume its earlier direction once it does that. Now, I've been in trades where up to 700 pips of profit, and I've watched that come back and stop me out at break even. And that was my lack of having a trade management process in place in terms of moving my stops or capturing part of that move. And I guess fear of missing out on larger profits keeps us from moving that stop. Fear of potentially getting out too soon, again, and missing out on larger profits. Fear of the market maybe moving ahead without us after a temporary correction. All these little things that psychologically will play into our minds, and it's important that you have not only your entry and exit strategies as part of your trading plan, but your trade management process in order to at least extract something out of a winning trade if it doesn't fully move to your target, or if you don't have a target, how you're going to trail that position out to make sure that you capture some of that move. So I'll talk just a little bit about my different scenarios. And normally on my 1 hour charts, I will take a 1 hour stop loss initially on entering into the market. That 1 hour is usually one bar. Most of them are within a couple of pips of being the same amount dollar wise or pip wise. But once that trade moves in 2 hour of profit, I will move my stop to 1 hour, I will move my stop to break even. Now, if that market is breaking out of a pattern, most likely for me, a smaller rectangle, I'm looking at rectangles, and usually rectangles or smaller patterns within larger patterns. So that initial entry that I may have entered into the market, once the market has either moved 1 hour, I'll move to break even, or if it's closed outside of a range of previous swing highs and swing lows. So if the market hasn't quite moved 1 hour, but it's closed out of balance outside of a previous high or low, I will move my stop loss to break even. That is a reason for that is that is a highly vulnerable time for the market to, when it's out of balance, to either reject that area and return to the previous area of business, which again would possibly represent a false break scenario, or a range-bound market scenario, which in turn would again negate my original hypothesis, because most of my trades are based on capturing momentum type moves. So once and again, so that rectangle, my smallest target is usually 2.5 R minimum, and that's 2.5 times the bar that I'm entering in the market on. Now again, if I'm entering that inside of a pattern, usually I'll extrapolate the range of that rectangle at least 2 times. So my profit target can be 3, 4, 5 times to 1. But once it moves 1 hour, I'm at break even. Once the market moves in multiples of R's, I will trail that by 1 hour movement of my stop loss. So for example, if the market moves 2 R, I will now move into 1 hour of profit taking. Now, There are certain times of the day, so the Asia close, the London open, that's when I look to enter most of my trades. If nothing sets up there, I look to enter in somewhere around the US Open. So in that scenario, if my profit target has not been hit by the time the US market opens, I definitely make sure I've moved my stop loss the multiple of our movement to make sure that if that market does reverse at the US Open, that I've captured that amount of movement. So once the US market's open, if it continues, again, I'll continue to track that movement of our multiples on the way to hitting my profit target. So it's important to understand that that's my hourly setup. And I will do something very similar on my end of day model as well. But it's really important that you have that mapped out and writing it down as the trade progresses, because once the market's moving and you're in profits, you may get caught up into watching price action or something like that, but you have to have a clear, concise method and process for exiting out of the market to hopefully ensure that, number one, you can capture hopefully the most out of that winning trade, and number two, to minimize not only losing money upon entering the market, but also ensuring that you don't let a winning trade reverse against you and turn into a break-even trade or even a losing trade if you haven't even moved your stop loss to break even. So that's my approach to the markets based on my experience. Now my end of day is slightly different because obviously we've got the rollover time of day. There are different types of scenarios that can take place at the end of day versus the intraday markets. But I know that I usually will end my intraday trades flat for the session, unless it's an explosive move which correlates and works in with an end of day scenario. Usually that has to do with an opening range trade reversal setup. So again, it's critical that you don't let a winning trade turn into a break even or a losing trade. So again, that comes from however you're trading, whatever time frame you're on, having a methodology to, I guess you could call it a trailing stop, but ensuring that you're capturing something out of that winning trade as it closes in on your target. So if you think about if you're risking 1R on your trade initially, and as that trade moves into profit to 2R, 3R, somewhere in that range of movement, now you've actually got a lot more money at risk in the market than what you initially had. So you want to ensure that your risk stays the same, because even though that trade maybe hasn't gone its full distance, it's still money that you're in profit on, and you want to capture some of that movement or profit into your account if the market does indeed reverse. So hopefully you got some value out of that video today, traders. Have a methodology that will help ensure that you're capturing something out of your winning trades if they don't go the full distance to your profit target, and also ensure that you don't end up at break even or in a losing trade scenario. So, or if it is a weak movement, again, if it moves 1R, most false breaks will occur at about 25% extension of a range. And so it's critical that you have some methodology of ensuring that you can get to break even as that market moves, and also capturing profits out of a winning trade. So if you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders, be able to work on, this is the type of material that you need to be working on day in and day out that will sharpen your trading skills, journaling your trades, going through scenarios with your trading and simplifying and into a strategy that you can duplicate over and over and over again. So download it. It's an audio file. You can take it with you wherever you go, listen to it, and also implement those little daily disciplines into your routine to ensure that you're moving in a direction of constant progress with your trading. Let's you and I get better together. Stay disciplined, stay focused, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets. And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.